you're still in the accumulation phase of life where you're earning those paychecks and you're working to stock away as much money as you possibly can into retirement accounts, that's a good thing heading into retirement. But I will tell you that when you take a look at your investment accounts, and if the majority of it by the time that you enter retirement is tax deferred money like 401ks, and which will roll over to traditional IRAs, or pensions that lump sum could roll over to traditional IRAs, the idea in your 60s, essentially during that retirement phase when you're considering retiring then, is to try to whittle down that IRA money and maybe do some conversions over to Roth, or maybe spend down some of that IRA money during your lower income years so you can get it out at a lower tax bracket than later. Because what's going to happen is by the time you turn age 72, you're going to be forced to take out those required minimum distributions by the government. It's not a company rule, but it's a government rule. They're going to force you to take out about 3.5% of your total IRA money each year, which could knock you up into the next tax bracket for a long time going. So it's really, taxes are something that you need to address early on in retirement and have a plan to do that. So if you're looking for a plan to be able to have an IRA exit strategy, to be able to rearrange the furniture in your portfolio, if you will, to be able to create a more tax efficient strategy, to be able to put yourself on a path to potentially a tax-free retirement, which is entirely possible for a lot of people out there listening, if you do the right things now to put yourself into that position, then let us know and we'll be happy to sit down with you and get you on a tax efficient retirement strategy.